Good morning. These are the things that matter most in Europe's market today. A stronger AI sovereignty signal around Mistral, a tech-led Asia handoff, a yen move that changes the exporter map, a quieter ECB credit warning, and oil and gold rising with geopolitical risk. The central question is simple. Does Europe open with a real risk-on confirmation, or does the tape separate AI infrastructure winners from credit-sensitive and cost-sensitive pressure points? Start with European AI. Investing.com carried the FT report that Samsung is in talks to invest in Mistral at a valuation around 20 billion euros. That matters because Europe has often talked about AI sovereignty, but the market usually asks a harder question. Who owns the models, the chips, the software layer, the power infrastructure, and the customer contracts? The cleaner side is European technology and infrastructure names that can connect AI demand to real revenue. ASML, Infineon, STMicro, SAP, Siemens, and Schneider Electric. Pressure sits with companies that only borrow the AI label without orders, pricing power, or supply chain control. For private investors, the takeaway is proof. A European AI champion headline is strategically important, but the tape has to show whether the value chain is broadening beyond one private company story. The second story is the overnight handoff. Asian stocks climbed, Korea's market surged, and chip-linked demand was part of the narrative. But U.S. futures were only modestly softer in the early morning snapshot. So Europe is not getting a free all-clear signal. It is getting a test. Does local breadth confirm the global tech move? Potential beneficiaries are semiconductor equipment, automation, power grid, and data center suppliers. Pressure sits with broad cyclicals if the rally is narrow and does not move into banks, industrials, and domestic demand. For private investors, the useful check is breadth. If only chip-linked names rise, the story is momentum. If banks, industrial quality, and selected small caps also confirm, the risk-on message is healthier. The third story is currencies. The yen moved beyond 163 to the dollar, with intervention risk in focus, while Japan's exports were reported higher on weak yen and AI-linked demand. For Europe, this is a competitive map for carmakers, machinery, luxury, and industrial exporters. The cleaner side is companies with pricing power, local supply chain control, and differentiated technology. Pressure sits with carmakers and luxury names if investors see weaker currency competition or Asia demand uncertainty as a margin problem. For private investors, this is not a currency trade. It is a confirmation question for Volkswagen, Stellantis, BMW, Mercedes-Benz, LVMH, Hearing, Siemens, and Schneider Electric. The underappreciated story is the ECB credit channel. The July Bank Lending Survey and the Access to Finance Survey both point to lending conditions that still matter for the real economy. This is quieter than an AI headline, but it may decide whether Europe can turn a market rally into domestic earnings confidence. Potential winners are banks that show credit quality, deposit strength, and manageable loan demand. Pressure sits with real estate, highly leveraged small caps, and domestic cyclicals if tighter financing limits growth. For private investors, this is the reality check. A rising index can hide a weak credit channel, so watch BNP Paribas, Deutsche Bank, UniCredit, Santander, European real estate, and small-cap proxies. The fifth story is energy and geopolitical risk. Early morning reports described further U.S. strikes tied to Iran, while Brent and gold were firmer. Europe can trade this as a split market. Energy producers can benefit from oil, but airlines, chemicals, transport, and consumers can feel the cost pressure. The cleaner side is Shell, Total Energies, BP, and energy security exposure if crude confirms. Pressure sits with Ryanair, IAG, Lufthansa, BASF, and other fuel or input cost-sensitive names if higher energy starts hurting margins. For private investors, the mistake is forcing one simple geopolitical trade. Energy strength, airline resilience, and gold strength can send different messages at the same time. Here is the stock-led watch list. ASML, Infineon, STMicro, SAP, Siemens, and Schneider Electric test whether Europe AI becomes investable beyond the Mistral headline. Volkswagen, Stellantis, BMW, Mercedes-Benz, LVMH, and Kering test the yen and Asia demand read-through. BNP Paribas, Deutsche Bank, UniCredit, Santander, real estate, and small-cap proxies test the credit channel. Shell, Total Energies, BP, Ryanair, IAG, Lufthansa, and BASF test the energy cost map. Market bias, constructive but selective. The global tape supports risk appetite, and the European AI story is stronger after the Mistral headline. But Europe still needs confirmation from breadth, credit resilience, and currency-sensitive sectors. The mistake to avoid is treating strategic importance as same-day confirmation. AI, currency moves, credit, and geopolitics can all matter, but the market still has to show which baskets can turn those headlines into earnings proof. That is the Europe Morning Market Brief. We will be back tomorrow at the same time with everything that matters. Research context only. This briefing is not investment advice. It is not a recommendation to buy, sell, or hold any security, and it does not include price targets, stop losses, position sizing, or personal financial advice.